Afternoon, how are we all doing? Sorry, microphone's really high up today for some reason. How are we doing? Afternoon, Mark from Google, Fletch, David. Happy to be watching the GOAT on your birthday. Turning 31 today. Wow, that was 2 decades ago for me. Afternoon, Jow. Afternoon, Amy. Happy birthday to David, yes. Happy birthday to you and all that stuff. Afternoon, Neo. Jeremy, xupdate.news, Chucks, YV, Christoph, how we doing? So today there is no news. It's boring. There's nothing going on. It's just a no news day. I be playing around with my browser, it's in the wrong place. Wonder why that was a bit low. Yeah, there's no news today. It's a bank holiday in Europe today. DAX was dead this morning. FTSE was pretty much dead this morning, so there's no trades this morning with the stock index hedge or ORB because they're all too tight ranges. We've got the 10-year bond auction this evening, but that's it. So it's dead day today. Not an awful lot of movement in the markets today. Sorry, just running a back test. Still going. Still going. Finished. Nice. Anyway, so yeah, not a lot happening today, basically. The ADRs, we've got one, which is Euro Pound, which has hit ADR to the upside, and that's it. We've got a weekly hit on the US dollar yen as well. So big, strong push up on the US dollar yen. But apart from that, not a massive amount of movement today, which you would expect on a no news day. So this US dollar yen getting close to the point I'm interested in getting into it. I'm just waiting for some bearish price action to come in. We had a little bit of a bear move on yesterday, but it pushed straight back up again within an hour and didn't go anywhere. We didn't break that low on Monday. We did get a reversal on Monday on the hourly, but it didn't go anywhere. And today it's just been rallying. So I'm watching this area here for potentially a short if we can get there today. It's well within ADR. There's plenty of room. And I'm looking to just get into a long-term short to hold using that level as a stop, which is the second intervention. So if you can get anywhere up to here today, half to 3/4 of an ADR, probably 3/4 of an ADR stop, be a good entry for a short. But I'll see. I'm not position trading it. It's just a stop loss trade, which I'll be running on another account. ADRs, not a massive amount to look at. There's a few which we'll look at today. But yeah, so it's dead news day today. Tomorrow we've got a bank holiday in France, Germany, and Switzerland. So tomorrow, don't trade the DAX in the morning. There won't be any volume. There's likely to be little volume in the FTSE as well, potentially. We might get a big spiky move and then nothing. But I'll be on tomorrow afternoon for the monetary policy or the interest rate announcement for the UK. So that's the main news tomorrow. So the market's just flip-flopping around today, waiting for tomorrow afternoon. So SIH... no trade again today. So NASDAQ pre-market range was tiny, too small to trade. The opening range, that is the opening range of the NASDAQ today. Too small, tiny. So no trade on the NASDAQ. There is a trade on the Dow long. No trade on the S&P. All too small. We've had a fair old move today, actually. So I'm in the Dow, but dead today. Absolutely dead. Financial juice, not an awful lot happening. Again, we basically had we go back. God, this is so annoying. This signal thing they've got going on just takes up the entire feed with crap. So going back to this morning, we had German industrial orders. Nothing particularly exciting. Suzuki talking overnight about Japan reportedly agreed on the FX intervention with the US. So the US knew the intervention was coming. Obviously, it's detrimental to them when the intervention happens. So it was a joint agreement between the Bank of Japan and the US to intervene. To basically, this intervention, this agreement is mutually beneficial for both parties. Although it weakens the US dollar, it enables trade to continue at a healthy level with Japan. So they talked about it. They did it together, apparently. So that was all we had overnight. FX levels, there's a lot of talk in there about FX levels. They're still watching it. It's like the intervention has been done in, and you keep basically now doing that. Do not push it. So it seems we've hit that peak formation high at 160. Whereabouts it will go back up to, whether it will go sideways, whether we'll get that multi-week drop, which we've had in the previous interventions, we'll have to wait and see. But overnight, otherwise, there's nothing much. We had the Fed talking yesterday afternoon, Kashkari. Very much this came out and said exactly what we already know. Nothing's going to happen on interest rates until at least September, October, or November. We're closely watching inflation. Inflation is being stubborn. It seems to keep bouncing. We definitely won't be putting the rates up this year unless inflation goes through the roof, which is unlikely to, but it's not actually likely to come down necessarily. So neutral, slightly bearish stance US. But again, nothing said there that we didn't already know. So scroll through all this stuff. Anyway, so yeah, that's news. So we'll have a look through the pairs this afternoon, see if there's anything exciting happening. Afternoon, everybody else I haven't said hello to. FTNet. You can't leave it alone. I know, US dollar yen. I'm not that worried about it, to be honest. I do think, obviously, we've got market structure bearish on this now. So it should potentially drop. The trouble with it is I'm not convinced it's going to be the same as the previous intervention. That was a shock to the market. This isn't a shock. We knew this was coming. So it's just timing it, obviously, was the issue. So I'm not convinced that the market won't do something like that. However, the bearish US over the next few months may well drive it back down again. So the idea is to hold a short for a long period of time. The problem with it is if it drops, pushes, and we're sitting there in 2 to 3 weeks, the spread is just going to eat you alive, or rather swaps are going to eat you alive. So it's a very hard thing to short at the moment. I don't think we're going to get another intervention move unless we push up into these sorts of levels, in which case then there could be. But if that was the case, I would need to scale into it, and I'm not going to position trade it. So I'm just watching it at the moment, looking for what I'm really looking for is something like that. I'm looking for a big spike of orders to come in on the yen, which then fizzles out a little bit, just to give some indication that there's still a lot of selling parties involved and interested. Because at the moment, obviously, there's no sellers interested, so there's no point in getting in. But we'll wait and see. Wait and see what happens. Right. So, yeah, the only ADR today we've got is Euro Pound. Euro's pushing hard today. We've had some decent movement to the upside on the Euro. It's starting to pull back a little bit now. But Euro Pound is your only ADR today. And that is above 100 ADR at the moment. We're just coming into the weekly highs. I think that's a 2-week high, or is it 3? 3-week high. We did push out above that 3-week high, but that is the high of that week. And this propulsion move out of that M pattern reversal. So this is rejection. That's where the sellers entered. That's exactly where we are now. So good looking short opportunity. I've got 2 shorts on this at the moment, with the third going in at the highs at 125 ADR if we can get through that propulsion gap. But euro should be short, certainly against the pound anyway. And obviously tomorrow we've got the pound rates coming out. So there's a good chance we might get some bullish movement, get some bearish movement tomorrow on the pound. We'll have to wait and see. But good looking short opportunity there. If it gets back up into that area, we'll probably get a pullback on that entire leg from those highs. So we'll see what happens tomorrow on that one. But that's your only ADR today. Thank you, Amy. Lee, on the position trader EA, while on the VPS, the charts should be left on the time frame in which you're waiting for closures above or below the MA. Yeah. So you always run it on whatever time frame you're trading. Wrong account. So this is running on the 5-minute time frame. So this is running H1M5. So everything runs on 5 minutes. So it's taking reversals on that moving average cross on the 5-minute chart. So always trade on the lower time frame. Everything I do is multi-time frame analysis. So we're using higher time frame extensions to find entries on lower time frames, whether that be moving average cross, market reversal alert, bearish engulfing, 3-bar reversal, however you want to get into the market. You enter on the lower time frame. So the condition is on the high time frame, the entry is on the lower. You're trying to get a faster, sharper entry. If you get in there, and the reason we use multi-time frame analysis is we're trading H1M5. You are trading the hourly charts. Yeah, it's an hourly strategy. H4M15 is a 4-hour strategy. So you're trading the hourly extension, the hourly push on RSI. But the entry would be, if you waited for a reversal alert, in this case, on the hourly, you'd be getting in at 86. On the 5-minute time frame, you'll be getting in up here. Yeah, so that's the difference in entry. This is why we use the lower time frame, because when the market's pushing on the lower time frame, you're going to get a faster, quicker entry, but you're trading the hourly, just using the 5-minute to time and entry, or the 15 minutes time and entry, whichever you want. 15-minute entry is going to be down here. The 5-minute entry was 86, which is roughly there. Sorry, the hourly. So the 15-minute entry, the hourly entry, and the 5-minute entry was somewhere up there. But in the grand scheme of things, sometimes the 5 minutes better, sometimes the 15 minutes better. Sometimes you should have waited for an hourly. Yeah, you don't know. This is the thing. This is what we can't time in the market. You cannot time an entry in the market because it's random. So you're using a condition and you're entering however the hell you want. Flip a coin. Pick a time of day. Wait for your dog to fart. Doesn't matter. Afternoon, Kenley, Yusuf. What's your thoughts on HFT? Can't trade it on CFDs. HFT is for banks. Don't try and trade any. HFT is a myth. It doesn't exist. It's banks. Banks do it. The reason HFTs work is because banks have preferential treatment. If you use an HFT strategy on the futures market and you're not a bank, you won't make money. Yeah, because there is a queue. When you press the buy or sell button here, there are a load of people ahead of you. Those are the HFT traders. Yeah, you can't beat them because you're behind them in the queue. Doesn't work. And you've got a spread to deal with. They haven't. It's just a myth. It's something that banks do. And people have gone, I'm going to create an EA that uses artificial intelligence for high frequency trading. No. You can make anything look good in a back test with a fixed spread. Will never, ever work in the real world. Try it. Buy an HFT EA with a back test that goes like that. Yeah, stick it on a live account for a month. See what happens. Weekly POC. Oh, I don't know about anything about that. you can't have a point of control on a Forex pair. There is no volume. Point of control is a volume indicator. There is no volume. You can't use it. I've gone short on both Euro Yen and US Dollar Yen. Hopefully. We'll see. Where's Euro Yen at the moment? Yeah, but it's the same thing. Basically, it's the same chart. So the only advantage to US Dollar Yen is if there is an intervention, this will move faster than the Euro will, but they will all move. So it doesn't really matter which you take. And, you know, the distance between an entry and really where you should look at not being right is pretty equidistant on both of them. Same trade. So just think about what you've done. You've just doubled your risk. You might as well just trade one of them with twice the lot size, because you're doing exactly that at the moment by trading both of those. Right. Does anybody watch Clarkson's Farm, just out of interest? I don't know how many people in here in the UK and how many people are overseas. But if you watch Clarkson's Farm, you probably can't see that. I've got some diddly squat bee juice whiskey. Very nice it is too. It doesn't sit there on my desk and just get swigged, by the way. I've just been given it. We've got some diddly squat blackberry jam as well. Right. So let's go through all the pairs and have a look at everything, because there's not a lot else. Pig scenes were tragic, I know. It's very sad. Poor piggies. Nothing much happening on the indices. Nice break on the NASDAQ in the end. Look, if you did take that, very, very, very tight range though. So high chance of hedging, but you've got nearly 2-hour break on the NAS. S&P's 1 hour. The Dow, because it's the one I got into, pulling back. Not a lot of movement. Very little across the board today, so we'll see. Right. So just going to whiz through all the pairs, see where everything is. We'll have a look at anything that's extended on RSIs. Let's do the RSIs first and see what we've got on RSIs. Not a lot. Really, the only thing that's extended is Euro Yen on the hourly. So Euro Yen is an H1 RSI extension. It's coming. That's a really good looking spot for a short. There'll be a lot of people watching this level, so maybe one of those self-fulfilling prophecies. And US Dollar Yen is the only other short, H1. So those are the only two shorts you've got. H1 M5, you've got hourly US Dollar Yen and Euro Yen shorts. Other than that, nothing. Dull, dull, dull. Right, so I'm going to whiz through all the pairs, have a look at everything, see where everything is at the moment. Upcoming news for the rest of this week. We've got the pound tomorrow. We've got unemployment claims for the US. We've got Macklem speaking. Probably won't do an awful lot, but most of you be aware of it. We've got pound GDP. Won't be as impactful as that. And then we've got the CAD unemployment rate and Michigan on Friday for the US dollar. So we've got pound, CAD and US dollar for the rest of the week. So there's no more Australasian news at all coming through. So Aussie, I'm short Aussie CAD at the moment off the back of the H1 RSI extension. Hasn't gone anywhere for a few days. This propulsion gap here, I'm watching yesterday's low at the moment on this one. I've got this actually up on the monitor over here. If we get a rejection off of that, I'm going to close this. I'm being a lot stricter with my positions at the moment because we're not getting any movement. These moves that we keep getting, these news accumulations, as I've described, just decided to call them. We basically get a news event and then we sit there, wait for the next news event, and then we sit there. If that is going to happen, I want to be out of these trades after a few days, basically, because as you can see, the RSI is down back at 40. We were extended up at the 80. We're looking for a pullback. We're looking for a profit take move. It's not happening. So any of these trades that I get into which have gone nowhere within 2 or 3 days, if they're in profit, I'm looking at cutting them basically and just getting out. Wait for another setup to come along, because this is now invalid. As you can see, it's below 50. This is certainly not a short now, is it? So in fact, what I'm going to do is I'm just going to stick a break even on it now, just to cover it. So it's either going to break today's low, or the propulsion move that they've rebought yesterday is going to get bought again. And if it gets bought again, there's a good chance that we're going to sit in a range for a few days, or we're basically going to rally. So basically the buyers are holding this level and the sellers who are trying to push through it are just going to flip long and go with them. So I don't want to be in these sorts of positions for too long at the moment, because that is literally all we're getting is these massive pushes on news. That one actually turned into fairly nice market structure, which undid nicely. But a lot of the time, as we know, we're sitting around like this, and if after 3 or 4 days the idea hasn't played out, it's basically reset to a 50-50, isn't it? So this will either go that way or that way from here. More likely, I think, to come down, but there's no point in taking extra risk at the moment. It's just this market is so flat and dead. So Aussie dollar CAD sideways at the minute, but I have got short on. Aussie dollar Swiss, prime example. This is the sort of stuff you don't want to get into. If you hit the short button there and you sit in it for 7 days, all you're going to do is be 7 days worth of swaps in the hole. Not worth it. So not going anywhere. Your guess is as good as mine. We've had a reversal alert short after attempt out the highs this week. It's rejected those. So best you can ask for is a push down, maybe 125 ADR. Not doing anything, is it? So nothing to look at all there. All the ends we know about. Support rectangle at the moment is holding on the second intervention. So no movement on this one at all. All the ends basically are the same. Yeah, we're just waiting to see what happens. At the moment, they're just kind of undoing this intervention move and creeping back up into the propulsion gap. But almost filled it on the Swiss there. Euro's almost, well, it's halfway. Pound stuck halfway. Obviously, pound is going to be affected by the interest rate tomorrow. New Zealand has filled the gap. So New Zealand is returned to origin on the second intervention. Obviously, it's nowhere near the first one. So if you do like this continuation move and continuation down, this is where you want to be getting in. And US dollar yen, we've already looked at. So we've got this pullback on the second intervention high there within ADR. And then from there, you've got roughly 3/4 of an ADR before you get up to this area, which they will either add into again and cause a large range to form, or they won't. But you can see the price contraction. This is normal price action here. This is normal candlestick size. This is the intervention move and all the volatility that came in around it. We're now returning back to these tiny little candlesticks. Yeah. So if you look at the average movement we get on this thing, that's a busy day. How long it's going to take you to get down to there? If we have 3 or 4 down days solid on the trot, in a week, you're only going to be down there, which is 150 ADR. It's going to be really hard to make money out of it. It looks like there's a massive move coming, but there's not. This is what we're going to return to, normal price action, which is looks insignificant now, doesn't it? And it is really. So ADR is 243 on this. That is massively skewed by these 2 days, obviously. So just be careful with it. It's going to be a grind to make money out of it, I think, which is why I'm humming and ahhing at the moment. Aussie, New Zealand, I got out of this one up here, decided to take a loss on it. Now it's dropped. Very difficult to tell what's going on with the Aussie, New Zealand. I think they're just going to correct this leg. So we're looking for a pullback, potentially back down into these lows, which is the last month's low, basically. This propulsion move, which we had. They added back into that. We tested it. They added back in twice. So I suspect we'll probably retest this level and get a little bounce out of it. So good looking short down to there. Obviously, we've had a big, strong move on news, pullback, retest, and drop. So it looks like a nice short. So propulsion gap, they added back into the sells. We hit that level, tried to bounce out of it. This is the buyers basically. This is the limit orders here triggering those two candles. So they bought it, 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 they got overrun, they flipped short. Yeah, so all the buyers that have been trying to prop this level up failed, so they're now shorts. So market's got plenty of room to run to the downside. But you're going to find more buyers here, which is 125 ADR, in which you'll probably start a pullback. So there's your high, there's your market reversal alert, low, lower high, lower low, lower high. And then back down into this area, which is where we may well find, so this area here, this blue area is the potential support. So Aussie New Zealand looks good for shorts. It's just not moving very fast at all. Again, same thing, isn't it? News, sit around. News could well just sit around, but looks like a good short at the moment. Aussie US, not really going anywhere. We're back up at the highs. So we looked at this one Monday for a short, which is lovely, but market structure is long. So potentially this could be just a pullback long on this leg, one or the other. So good looking potential opportunity to get in long on this Aussie US from here. But if you want to take that reversal alert short, you're looking to come down and retest this area or potentially back down into these lows. But it's a really awkward chart, this, because we had this lovely range formed, price discovery, which failed, which you would expect then to go back into range again. And then the next price discovery typically is the opposite side. So it'd be up. But to do that, we need a really weak US dollar. So we need negative news tomorrow and negative news coming in on Friday to give that US dollar a drop. And that will help the Aussie to push out these highs. So this could go anywhere at the moment. But if you took the H1M5 mean reversion entry, you're nicely in and short on that. Why did I not take that? Oh, that was... How am I not in that? Oh, I was. I'm out. Oh, okay. Oh, it's a second entry. So I was in here. Second entry out. So I'm out of this one. I think I might have got out of this today, actually. Oh, I didn't. I don't know. Anyway, so the initial entry was here. That was my second entry. I'm already out of it. I must have got out of that today, surely. Yeah. So that was my exit today on the Aussie US. Out that one. So that's your Aussies. Not a lot happening on those at the moment. There's no news on the Aussie coming up, so wait and see. There isn't any whiskey in that, by the way. CAD Swiss. Get rid of those. So CAD at the moment and the Swiss, not really any bias in either direction on those two. So we're waiting to see what happens with the CAD unemployment rate on Friday. So there's a potential big news event on Friday for the Canadian dollar. Unemployment obviously is very, very important. Their unemployment is massively high in Canada. It's 6.2% and it's forecast to go up, or 6.1 forecast to go up. So if unemployment goes up, that's negative. So we'll see what happens with that one. But there is potential for the CAD to drop on Friday, but we will see. So at the moment, basically, we are sitting down at the lows of the week, lows of Monday. Not really going anywhere very fast, as you can see. It's very, 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 very sideways. Bit of news. So there was an entry there on the CAD Swiss. I'm not trading the Swiss at all at the moment because I'm just waiting to see. I'm unsure what they're going to do moving forward, the Swiss, with their interest rates. And also worried about what's happening in the Middle East at the moment. So the likelihood is a probable drop on this one, I think, but there was an entry there. You had kind of a 50% retracement on it, less than half an ADR, and then it's come back to return to origin. So load of rubbish. Cover the yens, euros. Got one short on the euro odd. I'm looking short on everything euro at the moment moving forward. Basically, it's just only because the interest rates are dropping in June. So euro are the first major to drop interest rates in June. So that will lead to potential bearish movement ongoing for the euro. How fast and hard that drop will be, we'll have to wait and see. I don't envisage this collapsing out of all existence. It could well, just as you can see on the chart here, form a very nice sort of market structure short and continue to trend down. That's what I'm looking for from all the euro pairs, because everything else is unknown at the moment. So short everything euro from a bias perspective. However, if it comes down nice and orderly, you should be able to take it in both directions. But we need to wait and see what happens when that first interest rate cut comes. If it's a very, very large, fast propulsion move, you might find it comes down very, very quick. So we'll have to wait and see. So approaching June, I will turn the EA off of longs. I'll put it on short only mode and only look for a pullback entries, basically. So I just want to be biased short on it. So there's an entry there this morning. Literally just got that on this morning. There you go. Entry just gone in. There's your reversal alert. So entry short on euro odd this morning, nicely extended just about on the hourly RSI. You had an extension there as well. Again, lovely little short, another one there. So getting in short, obviously looking for that high to be maintained. So second entry, third entry if needed on double top. We've got no news really that should affect this one this week either. So hopefully it's just normal market structure and a couple of days back down, test these lows. Euro CAD already short on this one, second position on. We're up at a double monthly high. So we've got that high from 2 months ago, which double topped. Then last month we came up, we tested this area again, resold it. We resold that area again yesterday, but we've now retested this high and it's pulling back off of it beautifully. So looking for a correction back down into this propulsion gap, which is either a 61.8 retracement on that leg or it's a 50% retracement on that leg. But just looking for a pullback into there. And obviously, depending on what happens with the Canadian dollar on Friday, if the Canadian dollar is weak, this is going to fly. So ideally what I would like to see is this get down here by Friday lunchtime. And then I'll get out of it ahead of the news. But if I'm still in it, I'm still in it. There's nothing I can do about it. It looks good short. Lovely double top. Retest. It's holding this range at the moment. So there's your propulsion gap. Retest. That's formed the range low. This has formed the range high. So at the moment, we're just sitting around waiting for the euro rate. The euro rate doesn't come till June, so we've got plenty of weeks to sit around here and do nothing. But we'll wait and see Friday what happens. So short on that, 3 positions, average is within ADR, so just looking for a quick drop. Euro Swiss, this thing's dead as a doornail at the moment. Well, it's not dead as a doornail, really. So if you take out that bit there, which is the safe haven run, this is your range low, basically, and your range high. So we're bang in the middle, which is kind of what I meant. So nothing to do on it at the moment. Waiting to see what happens with the Swiss franc and with what's happening in the Middle East, etc., etc. So at the moment, both neutral, slightly bearish euro. Why did I switch from M15 to M5? Just because that's the strategy, H1 M5. No real reason. I've dropped the RSI down. So just looking for quicker entries, basically, because we're doing a lot of range-bound stuff, which is why I've dropped the RSIs. So today, doesn't matter. You know, like I said, flip a coin if you want to. What time frame you get into is just your entry, isn't it? It's right or it's wrong. I don't know. Pick one. Doesn't matter. Mumo, afternoon. Afternoon, Virginia. How many separate pairs that have one currency in common will you be in trades on at any one time? No more than 2 to 3. You can get into as many as you like. You just need to adjust your risk, basically. If you want to get into more pairs, i.e. trade everything, reduce your risk. If you just want to trade 1 or 2, you can use slightly higher risk because obviously your exposure is limited to 1 or 2. I'm kind of around about the middle. I've become a lot less focused on exposure at the moment because the market is so sideways. But if things are going to go into squeezes, you just got to try and get out faster. Everything is moving very jerkily at the moment, and it's all news related. Yeah. So if you get into like €3 short, and say you're in euro odd, sorry, not euro odd. Yeah, euro odd, for example. And the Australian dollar gets some news. You can get out of the euro odd and still be left in those other euros, which won't move an eyelid. Well, just won't bat an eyelid, won't move at all. So because everything's so jerky at the moment on news, you're waiting for news events to either get into drawdown or to unwind positions into profit. So exposure will become a lot more important when interest rates start to drive again. But be safe, use 2, 3 max. I teach 2 in the bootcamp. That's the ideal. Euro pound, short on this one as well at the moment. Looking for this propulsion gap to react for a pullback on this leg. Obviously, we're undoing this leg at the moment. This is a 71.9 retracement on this leg into this propulsion move. So good looking area to start looking for shorts. Obviously, this one will be impacted tomorrow. We'll have to wait and see. Either it's going to go like that if the pound drops, or it's going to go like that if the pound pumps. Either way, the euro's not involved. So it's down to the euro, down to the pound tomorrow as to whether it goes bullish or bearish. If the pound goes bearish, we've got resistance coming up at 200 ADR, which tomorrow will be less than 200 ADR, but there's a nice resistance where you're going to get some limits trigger there. So we'll see what happens. But very, very, very range bound. Euro pound, as we know, always is, sits around for ages and ages and ages. Then you get the odd news event and fundamental shift, which just causes nice market structure. But you can get stuck in it, as we know, for a long time because it just doesn't go anywhere. So if you get in just as it goes the wrong way, as I found out when I went long here, I sat through that for 2 months waiting for a move which didn't come. So got to be careful with these low ADR pairs. This is only 27. It doesn't move. There's no reason for it to move unless there's an imbalance in the interest rate differentials, which will be coming up in June. That will be starting to drop interest rates. That won't. So there will be an interest rate differential, which means this is bearish. Hence me not being too worried about being short. I wouldn't want to be long on it. Euro New Zealand. sideways range bound 2 months at the moment. So we're back down at the lows. We had a nice RSI extension there with a long. Again, perfect example of what I was saying earlier. If you get into an RSI extension long and it sits there and you're in a bit of profit for 3 or 4 days, get out, because this thing's now extended more to the upside than the downside. It's just not going anywhere. This trade is gone. It's dead. Get out of it. It's rubbish. So, same sort of thing. News, sit around. News, undone. Bit of news, sit around. It's just so mind-numbingly boring at the moment watching this thing go up and down. Euro US, one short at the moment. Looking for a retest of propulsion here, possibly here. That's within ADR, so that's the reason I've got the target there at the moment. We have broken out the lows of the last 2 days, so we are looking at the moment like it's holding as well, which is good. This is Monday, so we put the low in on Monday, tried to push up, came back, retested it yesterday, ended up sitting at the lows. This morning, Asia broke low, London broke high, retested, got pushed away. New York is testing again. So if that fails, there's a good chance that we will start a push back down into these propulsion gaps, which is where I'm getting out. But same as all the others, I'm not sitting in it forever. We've got news coming up on the pound, which will move the euro a little bit tomorrow. And then we've got US unemployment and University of Michigan on Friday. So if this is sitting around like this tomorrow ahead of the unemployment numbers, I'll be out and just jump ship. It's not going anywhere. Euro pound, same news, nothing. Sorry, pound odd rather. Say euro pound. News, no movement, 3 days sideways, dead. So you had an RSI extension again down here. So there's an RSI extension on I think it was Tuesday last week, where you had an opportunity for a long, looking like a nice double bottom. It just went sideways, and then the news hit for the Australians, and we've sat around, done nothing since then. So you would have a second entry there. You'd have a first entry and a second entry somewhere around here on a push up. So you're in slight drawdown on it if you're in it. It's just not going anywhere again. So sideways. And as you can see, RSI reset itself and getting up to the highs now after going absolutely nowhere. So totally dead. I got really itchy nose. I think it's this microphone, makes I only ever get an itchy nose when I'm doing the live stream, and I'm sure it's this thing. Must be sniffing in something out of my microphone. Nothing exciting. Pound CAD, again, sideways on this one. We had a lovely trade on this last week. H1M5 entry and exit in propulsion at the highs. Since then, you could have got in along there as well, but it's just dead sideways. 4 days now, done absolutely nothing. We're sitting around. We've got obviously all the Canadian dollar news coming this week. So good chance if those unemployment rates do come out as higher than expected, we'll get a push on this. But at the moment, nothing. So just waiting for a setup out of this range, which it's not doing currently. Pound Swiss, middle of the range again. So you've got the range low, range high. We're bang in the middle. So this could go either way. It's slightly bullish divergence on this at the moment. So we've got the RSI there, and it's putting a higher high on the RSI, and we've put in a lower high, rather a lower low on price. So it's ever so slight bullish divergence. You've just had a reversal alert this morning as well, which is retesting. So if that does put a nice W pattern in, there's a good chance it will push up back into that range high. But anything you get into pound-wise today, you are going to sit around and wait until the interest rates come out tomorrow. So that could go absolutely either way. It's all going to depend on what the pound does tomorrow. Pound New Zealand, same thing. I've got longs on the pound New Zealand at the moment. Out of these lows, so first entry was here on the RSI extension there, and then we had that big strong push down from the Aussie New Zealand pairs straight into support. So second entry's gone in down there, and we've just sat around so far this week. We are pushing out of these lows again now, so ideally I'd like this to be back up here, and I think it probably will be back up here by end of day because we're waiting for this tomorrow. So for me personally, I'd like a big strong bull move on the pound, but we'll see what happens. Just put TPs up there. So looking for a push back up into this accumulation. Basically these lows you want to watch as well. So we know there's a lot of buyers there which will have been run over during that propulsion move, automatically flip short. So they'll be adding into short positions. So that will be a good resistance to the upside. If that gets broken, we've got this accumulation they sold out of, which you're going to find more sellers at. So somewhere around there, you're going to find some resistance to the upside. But it depends what happens with the pound. If we get a massive bullish statement coming out of Bailey tomorrow, this thing could be easily up here. You know, support resistance pays no attention whatever to fundamentals. It will just fly straight through it. So we'll see what happens. Downside on it, risks are all the way back down into propulsion. So there's a lot of drop on this. 200 ADR from where we are. So we've got a 2 ADR drop. So potentially you could be in 4 or 5 positions down here if we get negative news on the pound tomorrow. But I'll wait and see what happens. Pound US dollar, same thing. If you get into anything to do with the pound US dollar today, I've got a long on the RSI extension. It's a lovely bottom here. So we've got this nice high we hit. We kept selling out of it, broke it, using it as support. Yep, so this is your support resistance. We're there again. So looking for a push back up. I'm not going to get greedy on it. I'm just going to target an ADR. So assume we're going to not crack that high. But again, it's all about tomorrow. It's either going to do that or that on the news tomorrow. So we'll wait and see. So those are your pounds. Using a 70 RSI gives you a few extra winners each month compared to 75. It gives you a lot of extra winners compared to 75. A lot. Go and look at the difference between hitting a 70 and a 75. The 75 is a lot less hit than the 70, which is why I use the 75, because you need a stronger move. But at the moment, we're just not getting it, are we? Yeah, and as you say, if the difference, if it's something is going to go into a squeeze, the difference between getting in at a 70 and a 75 makes no difference because you'll be up at 80, 85 anyway. So it's just that sometimes you can get in a lot sooner, especially with news. The danger with the 70-30 is in an accumulation, you can get into a trade and not get out of it. If you're using 75 or 80, price has usually done something like that before you get that hit. Yeah. So you've had a propulsion move usually before you get the extension, which means that it's a lot more extended when you get your first entry. But if it's the start of a squeeze, which is just going to turn to a flag break anyway, then, as you say, there's nothing, doesn't make a lot of difference really. David, I'm in positions on euro pound. I see on my chart where it says sell, but I don't see a red line where my sells are. What you mean? I don't know what you mean. You don't have a red line. This is the average price. This is the support resistance propulsion indicator draws this. It's nothing to do with the EA, nothing to do with anything else. This is drawn by the support resistance propulsion indicator. Not by the EA. New Zealand dollar CAD, we do the New Zealands. So one entry. So again, this has just got one trade on it. So my average price is that trade. That's why that red line is there. You can turn it on and off in the support resistance, not in that one. In the support resistance propulsion indicator, you can just turn off that break-even line on the chart. Turn that off, it will disappear. And you switch. Should do. Why is that not working? Oh, is it when you change instrument? Oh, yeah. So, yeah, it doesn't remove it when you turn it off. It just doesn't add it. I like it. Anyway, that's what it does. That's what does it. Not talking about my indicator. I'm talking about the normal red line that comes on MT4 when you get into position. There isn't a red line. It's a grey line. When you take a trade, your lines are grey. Yeah. Not red. Red is your TP. If you drag a TP or a stop loss, TPs and stop losses are red. Reminds me, I need to put some TPs on that. New Zealand dollar CAD shorts. So that's my TP line there, that red one. So I'm looking for a pushback down into support somewhere around these areas. Yeah. So if this is going to be new peak formation low, we're going to pull back. I'm looking for it to pull back into support. So TP is down there, which is below the propulsion gap. Again, Canadian dollar is going to decide this one. It's either going to do that or that on Friday. Possibly tomorrow when we have Macklem speaking tomorrow afternoon. Unlikely, but you never know. We might get a big bull or bear move tomorrow on the Canadian dollar. Look at this Dow. Oh, look at the NASDAQ. NASDAQ 3R break today. If you took the ORB or the SIH long, well done. 2R on the S&P. The Dow Jones, obviously the one that I'm in, just flip-flopping around the highs. So yeah, New Zealand dollar CAD, I've got a short on at the moment, which is the H1M5 entry from here. Again, 3 days sideways. What I've taken to doing at the moment is looking at my P&L at the end of every day, and then looking at the chart. If I've got something that is in virtually no drawdown or virtually no profit, and we've sat there for 3 or 4 days, I'm just scrapping it. Take a tiny little loss, take a tiny little profit, but we're looking for pullbacks. We're looking for elastic band pullbacks. There's nothing elastic band about that. There's the elastic band. It's snapped. It's not working, is it? Because there's just no momentum in the market. So I'm just getting out of these things. So if this afternoon we can get, a good couple of hours of bear candles in here and we end up down there this afternoon, we got Canadian dollar news coming out tomorrow and Friday. There's no point in being in the trade hoping that the Canadian moves where I want it to go. That's just flipping a coin, which is fine. There's nothing wrong with that as an entry strategy, but it's not my entry strategy. So we haven't had the mean reversion play on it, so I should be out of it. New Zealand dollar Swiss, enough said. You got a reversal alert followed by a reversal alert within a period of a week without any distance. It's just not going anywhere. It's dead. Dead. New Zealand US, good looking short opportunity from there on Tuesday, Wednesday last week. No, sorry, where are we? Monday, Friday that was. So that was the news on Friday. So very difficult to get into that there because the move was so fast. You would have got in an entry somewhere around about there. So you would be in profit slightly on it if you took it. But yeah, not the greatest trade in the world. Again, it's done the propulsion gap. It's filled the propulsion gap, look, which was there. So that was your propulsion candle. We just literally sat around in it for 2 days. It's closed it, and now it looks like it wants to rally away again. Again, US dollar news on Friday with Michigan. We got unemployment claims tomorrow, Thursday, tomorrow. So good chance we'll push back into propulsion, but it will all depend on whether that is a weak or a strong US. If it's a strong US, we'll be down there. If it's a weak US, we'll be coming back up to test those highs. But right now, bang in the middle of nowhere. And that one hasn't played out greatly. So sort of thing you want to get in and get out and take 0.25% on it if you can, 1/3%, something like that. US dollar CAD, one short at the moment on the RSI extension, which just got into, I think got into it yesterday actually. Got in there, coming down nicely, targeting, how much is that? Not a lot. I'm going to go 150 ADR. So this low basically from Friday. So this is basically the open of the week. In fact, it's probably better to put it at the open. Oh, I have. Pretty much. So just above the open, basically. So market structure is bearish. Just about. More range bound, really. So we've got news coming on both of these tomorrow and on Friday. So this will go absolutely anywhere. If this is sitting down here at 100 ADR and I've got $250, $300 profit, I'll have it. Other than that, I'll just sit around and wait for the news to affect it. But that's your entry, same as that one. Just looking for a pullback off this. US dollar Swiss, not playing with the Swissy at the minute. It's stuck. You know, so big price discovery failure, big price discovery failure, possibly failure. We don't know yet. We're there. So this is either pulling back into this support there, which is going to turn into resistance and drive it back down into propulsion, or we're just forming a range low again, and we're just going to sit and flip-flop around up here somewhere. That's your propulsion gap target to the upside. That's your downside target. Take your pick. We just had a reversal alert short. You had a reversal alert long yesterday. It's just not going anywhere. It's stuck. So, yeah. Could have got in down there somewhere, which you'd be out of a little bit of profit. If you got in on that one, that was a nice trade. But yes, very, 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 very sideways and stuck. We know about the yen. That's everything. A bit meh at the minute. Have anyone else ever used the Baby Pips market milk thing? Never heard of it. Market milk. It's just currency strength, isn't it? Yeah, I mean, it doesn't really give you any information. You can't glean off a chart, can you? I mean, it's you know, any information like this sort of stuff is all come from stocks. Yeah, the reason you jump on things like this is from momentum. So in stock markets, you want to know who the movers and shakers, where this phrase comes from. It's basically where's the momentum at the moment? What's being bought? What's being sold? With FX, it doesn't work that way. So, you know, looking at the top gainers, the Swiss yen, if you look at a chart, you'll be able to see that. Who's the top losers? If you look at a chart, you'll be able to see that. Yeah, this is what ADR is for. ADR is for telling you that there's been a top loser or a top gainer. If something's hit ADR like the euro pound today, it's the top gainer of the day. This is the thing that's moved beyond its average daily range today. You've got an indicator that tells you that on the chart. At least with the indicator, you can see it approaching the level rather than watching something that tells you it's happened in the past. Doesn't help you, does it? I probably have looked at it in the past, but don't really see how it helps much. It's very gimmicky, baby pips. It's gone very, I don't know. It's a really good place to learn the basics, but 90% of what it teaches you in here is total crap, obviously, because we know that. It's just teaching you to try and predict the future, which you can't. Okay, so the grey line, I don't see a line on mine. Is there a setting for that? No. No. Might be an MT5. I think there is an MT5. There is. In MT5, you've got a setting in here to plot trades on the chart. I think in MT5. There you go. So show trade levels and show trade history in MT5. Tick those. That's just right click, properties. Yeah. But MT4, you don't get a choice. It is what it is. It's just shown. Unless you've got the color set to nothing. Tralala, I kind of hate it when it works from the first entry. It's annoying, isn't it, getting it right? Lifestyle stays for straightforward. I make only 0.25% per pair. Yeah. So position trading is a double-edged sword. The reason people say an awful lot, why is it? When I'm right, it's really, really quick. But when I'm wrong, I seem to be in it for ages. And I seem to go into way more drawdown than I ever make. That's the point. Yeah. So if you get into something like there and it just pushes against you and then you're out 2 days later, fantastic. If it goes against you for 3 weeks and you have to get into 4 positions and then it comes back down and then you get out, it seems like it's taken forever, doesn't it? It has taken a lot longer than that, but the outcome is always the same. When you get into multiple positions, you have the opportunity to make an awful lot more money, especially if you're using lot multiplication. So here I've got a 1.04 short. Here I've got a 1.35 short. If I get in here and here, the lot sizing up here is going to be somewhere in the region of 1.7. So in total, I've gone from having a 1.04 looking for a quick half an ADR to an ADR move to having 4-5 lots on short. A news event in my direction can make me 2 to 3% in an hour. Whereas if I get in with one trade to make 2 to 3%, I need a 3 ADR push. That ain't going to happen in an hour. That's going to take days, possibly weeks. So the whole ethos around position trading is it either works and we make a little bit of money, yeah, or it doesn't work and we have the opportunity to make a good amount of money. But the price you pay is drawdown. It's the cost of doing business and the swaps and spreads. Yeah. So the longer you hold, the higher your lot size. The higher your lot size, the more you make out of moves. Yeah, which is why, again, I've said it in here many times before, you'll see my P&L sitting there at 6%, 8% in drawdown, 10% in drawdown. I'll come on the live stream the next day, it's in 1% of drawdown and I've banked 9.5% profit in a day. Because all those drawdowns I had, which were causing 10% of drawdown, only needed to hit 100, 125, 150% of ADR to make me a break even. We had a news event which pushed it to 200 ADR. That movement there from break even to that 200% ADR line is now not worth 0.25% or 0.5%. It's worth 2%. happens to 3 pairs in one day, which it does on news regularly, you are suddenly making a lot of money, which is why you see on my P&L constantly big numbers going in, 8%, 6%, 9%. Not that often, but often you'll get 2%, 3%, 4%, because it's like putting in something in the oven, waiting for it to cook. That's the cook. You just got to wait for the cooking time. Yeah, this cooking time isn't anything we can control, anything we can know. That is nothing we can control or know. It just happens. The difference between having a trade on with 1, 2, 3 positions and making either 0.25%, 1%, or 3% is the difference between looking at the chart that day, or not being able to look at the chart for 3 days and looking at it there. You've no idea how far it's going. You might have looked at it there and gone, brilliant, I'll move everything to break even. Unlucky. This is all random. Everything's random. Yeah. That's why nothing works in back tests and the forward testing, because whatever has happened in the back test is not going to happen in the forward test. Am I still using FX Blue to track my results? No. Is your yen a good short? If you want to get into the yen, it is, yeah. Up to you. Your yen. Do you think the intervention move is going to stick? If so, if not, yeah. For everybody that says this isn't going to hold, someone is saying it's going to hold. Someone's going to be right. I don't know. At the moment, what I do know is it's very erratic, very unpredictable, and you can't time it. So this, to me, looks like a beautiful technical double top. Whether or not it works, it's a good-looking stop-loss opportunity if you put your stop somewhere up here and give it 3/4 of an ADR to breathe. It's good. The site looks a little Japanese. What, Baby Pips? I don't know who owns Baby Pips at all. No idea. No idea. It's basically a massive affiliate website at the end of the day. There's links all over it to brokers and all sorts of stuff. So it's just an affiliate website, but it was one of the first, which is why it's so popular, because it's one of the first ones out there. But it just teaches you all the basics. It's great. I'd send everybody here that's new to trading to learn the basics. So you go through the Baby Pips School of Pipsology. It's a brilliant system. It teaches you everything you need to know about the basics of trading. Won't help you in any way, shape, or form. It teaches you, what's a support resistance level, what's a candlestick, what's Fibonacci, what moving averages are. You need to know all of this stuff. It's not going to help you. What's an oscillator? Important chart patterns. Yeah, it'll go through head and shoulders patterns. Yeah, go and try and trade them. Won't work. But you need to know what head and shoulders is. Yeah, it won't help you, but you need to know all of this stuff, because there is a possibility of it working or failing. Yeah. So if you want a system or strategy, good as anything else, isn't it? But everything on this website teaches you to use stop losses. So, yeah. Kaboom. Price dropped. 2 out of 10 times it does. The others, it doesn't. But it also doesn't go up enough for you to make money out of, because what's happening here? A news event and a range. 90% of the time. Sometimes that happens. Most of the time that happens. So as soon as that's happened, you move to break even, you get stopped out of break even. That's the reality of trading head and shoulders patterns. It doesn't teach you that, does it? But it does look very Japanese, doesn't it? Probably run by China, and they're spying on us. Euro pound plays out well for me. Good. At the moment, it's coming down nicely out of the propulsion. So sellers adding back in. Reversal alert on the hourly will be there. How's the RSI 2 testing going? Slowly. That's one of the things I'm testing here, which I just showed. I've kind of gone down a bit of a rabbit hole with it. I've built an EA to test it in detail, and there are a lot of ways of making money out of that strategy. A lot. Including end of day close, trailing stops, standard stop loss strategies, scaling strategies. There's an awful lot of ways of making money out of it. But what I have found is the 4-hour time frame is not the time frame to do it on. The daily is, which is what Larry Connor's original work was based on, the daily RSI 2. So I've developed an EA which I'm using to test lots and lots and lots of criteria for exits. So the main exit criteria that the vast majority of banks and institutions use, first of all, it's stop and reverse, which is the obvious one. So when RSI is extended, you get in. When it gets extended the other way, you get out. Whether that's profitable or not, irrelevant. What we're doing is we're stopping and reversing. We're flipping and reversing. Yeah. So this is where the propulsion candles come into play. Yeah. So your battle lines are there and there. If I am a bank and I am long, I'm going to add into my position there. If that doesn't work out, I'm going to flip short with you guys because you won. If we get to there and it pulls back and we push through it, I'm going to add here and try and push through the level. If it works, I'm going to add again. That's what banks do. They scale in and out of positions in line with where price is aiming to go or where they are pushing price. So stop and reverse is one exit criteria. Hard stop loss, I'm testing as well with different ADR variables, which I can't find one that doesn't work. I'm also testing MA trailers. I'm testing ATR stops, exit at balance, exit at monetary amount, exit after time. I'm testing everything. I'm testing it to, you see the size of the EA I've built to test this. It's big test. And everything I do makes money. Yeah, this test I've just come up with by accident, right? I did a test on the everything I'm doing is on daily. Daily is so much better, so much better. But everything I'm testing on daily, I'm using candle close because obviously there's no point in using anything else on a daily time frame. It shuts. Is it? Yeah. Great. Get in. Isn't it? No. Don't get in. Simple as that. So I'm testing lots of daily stuff, and as I'm testing daily stuff, I'm watching it. This is an hourly time frame, so ignore this test. But I'm watching it go along on the daily and thinking, but there must be a better way to get in using multi-time frame analysis. So I'm currently testing H4 and H1 entries using daily RSI, which this is one of those tests. You can see the P&L at the moment. You can't see all the P&L, but this is using a stop loss strategy of half an ADR. I think this is the half an ADR test. And yeah, I can't seem to break it. It has dips like everything, and it has wins like this. Yeah, this is using end of day close in profit, which is a variation on end of day close. 1 day early in this case, unfortunately. But when it works incredibly well. When it doesn't work, it works well. Just look at that. I mean, trades like that make the P&L suddenly jump like that. Yeah, I've used trend filters. I've got trend filter in there. I'm only testing 90-10 at the moment on the RSI, which seems to be working incredibly well. I haven't tested any other levels yet. But yeah, it's great. So I'm doing a very, very, very thorough system parameter permutation test. And when I say thorough, one of my biggies. So this is 19,200 permutations. And I've got return on drawdowns as high as 6. And you can see these are all profitable. Yeah, so I've run 19,000 tests here. 17,700 of these 19,000 tests are profitable. Bloody good. But it's daily time frame. Yeah, so we're looking at in a 4 or 5 year period, taking somewhere around 300 trades. That's something I was going to work out, actually. How many trades a month are you going to get? So we're looking at 20 trading days a month. 20 times 12 times 4 is 960. So roughly 3 trades a month. 3 to 4 trades a month is what you'll get out of each FX pair. But yeah, I'm running loads of tests, but it's so good. That's unfortunate. Did that make a big hole? Well, it doesn't make a big hole. It makes a hole, not a big one. But the next day, it grabs back the vast majority, because if it's an RSI extension, when you get in and the news goes against you, usually you get that, as we know. That's why we trade RSI extensions. But yeah, this is on, I'll show you the euro pound. One of the things with this strategy that I am finding is the tight low ADR pairs are a lot better, much better, because obviously they're more range bound. When you do get a strong push, it undoes faster. So you find that they actually make like that stupid amounts of money. By the way, this test, what it's doing is it's breaking a single position into 10 over a period of time. So it's only, it will get into anything from 2 to 10 positions a day, dependent on what it's what's happening in the market, basically. But days like that create equity curves like this. Watch this equity curve on euro pound. I haven't done anything clever. This is not curve fit. This is using the same settings on every pair. But you look at the equity curve on this. It does stagnate for a while at times, but when it's not stagnating, i.e. the market isn't trending, which it spends 80% of its time in mean reversion and 20% of its time trending, it just creates this beautiful gradual revenue increase. This was a 10K account. It's sitting at 42K now. But look at it. It's just, there's no huge, horrible losses in there. And there's a lot of pairs like this. US dollar CAD, Euro pound, Aussie New Zealand. There's a lot of these types of pairs. You know, so it's 46K return on 10K. This is risking $100 a trade as well. Yeah, tiny risk. This is a 10K account risking $100. Nothing. You up the risk on this. This thing seriously generates some revenue with very low drawdown. Yeah, 37K profit off of 8K drawdown using a stop loss. Yeah. It's got legs as a strategy, definitely, but only on the daily. The 4-hour testing I was doing looked promising, but it's not. I am going to do another round of testing. Now I've got the new EA that I've built to test it's basically just built for testing. So now I've got this built, I can test the 4-hour time frame a lot more thoroughly. Because it's using candle close only, the speed of testing is phenomenal. So this, if you look at the day, if I do a 4-hour time frame over 4 years, yeah. So this is how long it takes when it starts. Done. It's a 4-year test on a 4-hour time frame. Never done that test before, but 28k, so 18k profit, $4,000 drawdown on a 4-hour time frame at random. But if I run a system parameter permutation test on this, 90% of it is profitable. So it's got a lot of legs. But what I want to do is find a range of settings that, or rather not so much a range of settings, I want to find the best exit strategy, whether it's best to get out end of day, whether it's best to get out end of day in profit, whether it's best to get out at a monetary amount, whether it's best to use a stop or not use a stop, whether it's best to scale in multiple positions or limit the number of positions, therefore limiting the drawdown in a squeeze. There's a lot of testing to do. But as I said, out of the 19,000 odd tests I've done, and I've done this across 1, 2, 3, 4, 5, 6, 7 pairs so far, virtually everything is profitable. Obviously, I can't tell out of these 19,200, the 17.6 profitable. So there's what? 1,500 tests out of 20,000 odd, which aren't profitable. And I can't tell whether they blew the account or whether they just weren't profitable. If it was $1 in negative at the end of 4 years, it's not shown. So I can't tell whether they are, account blowing problems or not. But yeah, it's a really good strategy. But it's one of those strategies that's been around for decades and has been used for decades on high time frame by investment time frames, but mainly in the futures market. So I'm just trying to adapt it to FX. And obviously, because FX is more random and there is less trend, it's a lot harder to figure out, what is the best way to do it. But I do know for sure using a trend filter is not the way forward. As soon as you apply a trend filter using 20, 50, 100 or 200 moving average on the daily, it starts to generate less profit. Because, this market goes up and down. You can trade this up there, you can trade it down there. Whether the 200 moving average is down there or not just means you are going to miss all of that lovely profit. Yeah. You're still going to make money on that. You're still going to make money on that. You're just going to miss all of the lovely market structure pullbacks, of which a big push up and quick pullback, which is what the RSI2 trades, you're missing it all. So, yeah, it's good. But got more robustness testing to do. I've also run this as well. Just, I don't know what settings I've got on this, but I'll run it on the daily. I've also run this over COVID and the 2018 financial crash. Didn't bat an eyelid. So I'll run it now, actually, 2014. Assuming I've got data. Yeah, this is a 4-hour hourly test, so this might not actually work. Yeah. Okay, so it didn't lose money. This is the wrong settings for the daily time frame. But even through COVID, yeah, it recovered it all, and it didn't blow. Yeah, maximum drawdown we took was 3k on a 10k account, so 30% drawdown on one instrument. That was over COVID, so looks good, looks really good. But it's I'm not sure whether the position trader EA is the right tool for the job. There you go. So that's £1 US over a 10-year test, and it made money. And it made money through COVID, made money through the financial crash. Money. Not great amount of money, admittedly. but it did. So now I'll update you on that, but it's not the testing that takes the time, it's the analysis of the testing, delving into 30 or 20,000 system parameter permutations, trying to find confluence between all the currency pairs, which is the time that takes, what takes the time, basically. It's all the analysis. But that is always the way with any strategy. You know, my position trading strategy, I spent an awful long time putting in the legwork, doing the analysis. Dow Jones TP hit. So SIH, nice break on the Dow eventually. 4R NASDAQ, 3R S&P. That's annoying. Look at that. The difference between me taking that and not taking that was 1 pip. Minimum range was 64. We got 63. Minimum range was 308. We got 303. So if that had been a 308 opening range today, and if that had been a 64 opening range today, they both would have been 4R and 3R TPs. The difference between making money and not making money is 1 pip. Just the way it goes. But anyway, I'll update you on that at some point when it's when I've done more analysis, really. Afternoon, Paul. Will you write a blog post about that? Well, I'll do a video about it. Yeah, at some point. But it's yeah, I need to do the legwork first. It's good when you're using strategies. You know, there's all these. There's a absolute bucket load of profitable strategies out there. Yeah, Larry Connors, Larry Williams. There's the Turtles, New Zealand dollar, yen got an RSI extension. This looks like yen's still a little bit weak today. Yeah, so there's a bucket load of profitable strategies out there, but you'll find that all the profitable strategies work on the daily time frame. Yeah, and there's a reason for that, because it filters out all this crap. Yeah, all the chop that everybody wants to make money on because they can't be asked to wait 5 minutes to make money. Yeah, all the people that have made the money over the years are using the strategies that are on the daily time frames, because the daily time frames show you what is really happening in price. Yeah, which is why I focused on H4M15 initially, because H4, there's only 12 candlesticks in there, isn't there? Oh, sorry, it's not 4, 8, 12, 6 candlesticks in a day on the 4 hour time frame. So, you know, you're breaking a day into 6 bits. When you're trading the 5 minute time frame, you're breaking it into a shatter all over the floor. It's just mess. Yeah. So, you know, all the strategies that I use intraday are all adapted from daily strategies, and most of the people that make the money are using daily moving averages and daily relative strength indicators. So, but as soon as you move from that time frame down to that time frame, the reliability drops by a factor of 6. You move it down there, it drops by a factor of 24. You move it down there, it drops by a factor of however many candlesticks are in the day, which is a lot. This is just algorithmic mess. It's going up today. That's what the daily tells you. The 5 minute tells you it's gone up, down, up, down, up, down, up, down, up, down, up, bit down, going up quite nicely now. What's going to happen next? No idea on the 5 minute time frame. But on the daily, I can tell you it's going to close bullish. Filters all the crap. All the crap. But if you drop the RSI down now on the daily to an RSI 2 close, you'll be want to get in short. Yeah. That in 6 hours time, you want to hit the short button. You watch. But that's the yen pair, so actually ignore that. I have no idea what's going on with the yen. Do you absolutely anything? I cannot watch every live. I thought at some point you trade SIH anymore? No, I do. Yeah, I hadn't because the markets weren't moving, but they are starting to move again now. Whether they continue to move, though, I don't know. I don't drop strategies. There's nothing wrong with the SIH strategy. There's nothing wrong with the OIB strategy. It's going through a period of stagnation. That's all. So, oh my God. If you look at the back testing, yeah, there's periods of stagnation. Yeah, but the strategy is not going to work all the time. Yeah, it's a breakout. It's a momentum breakout strategy. There is no momentum in the stock markets at the moment. Yeah, virtually every day we are seeing accumulation around the open. Yeah, with the odd breakout. Yeah. So it doesn't work all the time. When it's not working, it is stagnating. Yeah. So if you can identify a period of stagnation, don't trade it. When you see the market starting to expand, volatility index, VIX, is a good index to watch for volatility. Tells you when the market is expanding. When the market is expanding, you get higher movement at the open. However, at the moment, the open is 35% down on normal volume, which means when you've got a momentum breakout strategy without any momentum, you tend to get a spike and a failure. So it works okay as today, look. And this is why at the moment I'm just trading it with a 1R. So I'm looking for a 1R move at the open. Today was a beauty. I mean, that was a 4R. I wouldn't have taken that. I would have got out there and I would have got out there. Those are my targets. That's my TP1 and my TP2 at the moment. 3R is all I think you're ever going to get at the moment. Every now and again, you'll get something a little bit more. But I was trading 3R and 5R. 3R and 5R is just not getting hit. It will do. But the problem we have at the moment with the stock market is if you look at things like the Dow at the moment, yeah, you get, we are kind of going back into a bull market, but are we? Yeah. The only time this is going back into a bull market is when the interest rates come down on the US. Then we're going to get a big bull run. Those interest rates aren't coming down at the moment. Therefore, I think what we're going to get is the odd news event that drives the market nuts, which is what we tend to get. And stocks, if you get a big earnings in the stocks and a big rally in the stock. But look at Tesla. Tesla, was it Tesla or Nvidia? Who was it? Had earnings a couple of weeks ago or last week. And it was like, holy crap, it's 10% up. NASDAQ didn't move. You get one of the major players having a 10% earnings increase in a day and the NASDAQ not moving tells you something. There's no interest in anything else. Is something moving? Yeah, we'll buy that, but we're not interested in anything at the minute. So what do you get on the open? It's just not moving. The characteristics of instruments change. The stock indices, the characteristics at the open are either lunacy, undo the lunacy, or nada. These big whipsaw moves. Yeah. Yeah. Look at that. Whipsaw, 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 whipsaw. We did manage to put in a high, but look at the movement. It's awful. It's just not the norm at the minute. It will return at some point. Or hopefully it will return at some point. But, you know, things like that. Very, very, very hard to make money. You know, there's a lot of traders in stock indices at the moment being killed. But that's why you need multiple strategies. Nice move on EuroCAD. Yeah. My TP, I haven't got one, but it will be there. Propulsion gap. So 150 ADR. However, depending on if you're in, yeah, I mean, my TP is my TP. My TP's got nothing to do with you. Yeah, you put your TP where you want your TP. Where I put my TP is based on my positions. Your positions aren't the same as my positions. So I would target that propulsion gap. However, if I had only got in with one trade today, I would be getting out now because we're hitting a potential support. We're hitting the high of last week, which has been bought up and is being bought right now. Look. So look at last week's high, which is this black line. Yeah. So we sold into it. Buyer stepped in, buying the break of the high, which they bought here. So they're adding into the break of the high. Yeah. Sellers tried to force a failed breakout. Buyers said no. We've hit that level. Buyers bought it. We've just tried to hit it again on the 5-minute. Buyers have bought it. So we are sitting at the limit orders right now after a strong push. Market's knackered, likely to push back. So if you're in off that reversal alert or any other reversal alert you've had today, get out. You've made your money. Job done. If you're like me and in 3 positions, I can't get out here. So I'm getting out when we come back and retest that. But that will be decided by the Canadian unemployment rate on Friday. Hopefully, we'll get back to there by Friday. Or Lagarde or someone will come out and say something to drop the euro. Holzman's been talking. The Fed's dollar status makes it the gorilla in the room. Good turn of phrase. What the hell does that mean? It's really hard to find any information now. This crap. You want to be able to turn this off. Is there a filter for this? They need a filter to turn that off. It's going to annoy me. I want to find news. I don't want to find your opinion on the market, whoever you are. I was watching this video earlier. It wasn't that video, but it was another video. This guy sounds like he's South African. I have no idea who he is, but all of a sudden he's become a signal service. Is that RSI2 mean reversion? Yeah. Up to you how you trade it, Mark. Everybody's got an opinion on it. Yeah. So, you know, I get slated for using RSI mean reversion. People constantly telling me, you're doing it the wrong way, mate. When it goes above 60, you buy it. It's like, yeah, sometimes you do. Sometimes you don't. Next time it goes above 60 and you buy it and it drops like a rock, are you going to tell me I'm right? Or are you just going to tell me I'm wrong every time it goes up? That's basically what everybody does, isn't it? I was right. That's basically what you get. Yeah. So, hey, you buy it when it goes above there. I got out there. Did you really? You got out just before it collapsed, did you? Yeah. Yeah, I got out there. No, I moved it to break even. So, yeah, I didn't make a loss. Yeah. Do what you like. It's a relative strength index. When the line's going up, people are buying it. So you are the person with the balls of steel going, sometime it's coming down, mate. It may not. It means that every indicator means everything, doesn't it? Yeah. So if you have a moving average on a chart, right? As soon as it crosses that moving average, half the market go, it's along now, and half the market go, it's going to bounce. Who's right? The people whose direction it goes in. Does the indicator make any difference at all in where that price is going next? No. Relative strength index gets above 70. It means there's a lot of buyers in the market. What happened? It pushed up higher. Well done if you bought it above 70. However, did you buy it above 70 there? Whoops. 2 instances on the chart, exactly the same signal. One worked, one didn't. Why do we position trade? Because I have no idea what happens when it gets there. Sometimes it comes down, and that's where I make my money. And if it doesn't come down there, I wait for it to come down later. The guys with the stop losses, though, have to have a high strike rate, which is why they lose all the time, because you don't get a high strike rate with anything. Just because it's go back and look at it in the past on any instrument, right? And just scroll out and go, okay, 1, 2, 3, 4, 5, 6, 7, 8. One behind my head, 9. So there's 9 instances where there was a signal above the 70 line. Yeah. Go and look at how many times it went up from there and how many times it went down from there. That's your strike rate over that chart on that period of time. Now go and do the same experiment 10 times on 10 instruments over 10 different time periods and tell me if the strike rate is the same. It's not. Different. Does it help you in any way, shape, or form? No, but you've got to have a strategy. So, yes, for me, RSI 2 above 90 is a sell, and that's Larry Connor's original strategy. But the original strategy was created for the S&P 500 using long only, never took a short, in a trend. Definition of a trend, above the 200 SMA. I've just done a load of testing which says that means nothing in Forex. And for everybody that says, yeah, but it does in a trend. Yeah, it does in a trend. But in a trend, what does it do in a trend? This is trending up. I made money, made money, made money, made money, made money, made money. Why should I only make money there? Why won't you allow me to make money there in a trend? This is why we mean reversion traders. Mean reversion works in a trend. It works in a range. It works in a failed breakout. What's the market spend all of its time doing? Trending, mean reverting in a range, or false breakouting. Mean reversion works everywhere. But, you know, if you look at a 2 RSI and you took a breakout of a level, so it went above the 90 level there. Actually, it went above it there. Beautiful long signal. Yeah. Beautiful short signal. But also, depending on where your stop loss is, beautiful long signal. Went above there. Nowhere near a long signal. Was a massive short. Went above there. You didn't want to be buying it. Went above there. Didn't want to be buying it. Went above there. You didn't want to be selling it. It's all random, and it comes down to risk reward and how you use that information to make money and extract it out of the market. Yeah, nothing is ever going to be correct, which is why I'm using the 90-10. Because I only get signals after a big, strong move. If it comes down and it's in profit, take the money. Yeah. Sometimes it will come down by that much. Sometimes it will come down by that much. Take the money. Just take some money out of the market. That's what his strategy was designed to do. The way that Larry used it was in, out. So you get in, you get in, you get out. Yeah. So that amount of movement. It made a lot more. But if it's up there, you flip the other way. It's an always in strategy. In, out, in, out, in, out. If you're getting out the market, it's because it's extended. So what do? You get in. Yeah. It's one of those strategies that's always in the market most of the time, not all the time. And if it's sitting around flip-flopping, you don't do anything. Same as my normal RSI. And again, median and close. No difference. On the RSI dashboard, the line in the settings where you input the pairs, is there a limit on the amount of letters? Yeah. I can't remember what it is, but if you type in there, and all of a sudden, so because you can type in there indefinitely. Yeah. But when you click the button to save it or to OK it, that will get cut off. I think it's 60. It's either 64 or one. It's basically it works in RAM. It's 64, 128, and 256. I think 3, 6, 9, 10, 12. I think it's either 64 or 128. So and this is why I have this pairs prefix and suffix, because if you have a prefix or a suffix on there, so if it is euro odd dot RUF, for example, that's a hell of a lot more characters you're adding in. So the solution is to run 2 dashboards with half on each. So you would have half of them on this one, run another dashboard with the other half. Oh, as you've just said in your second part, .fx, yeah. So that's where you put the suffix and prefix. This is only an MT4 and MT5. I think you have to do it individually. So you just have to just run 2 dashboards if you're getting to a point where you can't fit them all on. People look at drawdown wrong. We enter a small trade in case it comes our way. We don't miss out on the move, but we're expecting it to go into drawdown so we can build up the position and make the dollars. Yeah. That's exactly where everybody goes wrong, because you're unable to time the market. No one can time this market. It doesn't matter how many times your strategy has said this is going to work 70% of the time. When you run it real, that back test, that percentage strike rate that's happened over a period of time isn't the same. Not going to happen the same in the future. So if you work on a strategy with a 50% strike rate and get it up to 70%, you're curve fitting it to the previous time frame, to previous history. Previous history won't repeat itself. So everyone's looking for a way to make a strategy with a stop loss work. In reality, you can't predict the future and everything is random. So if you get in and you're wrong, you wait. Get used to seeing red, exactly. There's like I keep saying, it's not about when you get in, it's about what you do after you get in. Yeah, I was totally wrong on Euro Cadlet. That entry, wherever that entry was, but it's there, short. There. That was totally wrong. Yeah, it wasn't wrong. Many people, it would have been right. For me, it wasn't right because my target was down here. So for me, it was wrong, but it was right. Yeah, it was right. It came down. You could have got out if you wanted to. I didn't. It pushed up. And then I got in again, and I was wrong again. So get in again. And at the moment, that entry, this reversal alert, looks like it's the one. It's either going to bounce here, and it'll be wrong, or it'll be right, and I'll get out. I don't know. So that RSI extension was right. That RSI extension was right. That RSI extension is right. They're all right. But what happens after the trade means you are either in it or not in it. If I'd have got in there and got out there, I wouldn't be in it. I would have got in there and got out there and I wouldn't be in it. I'd have got in there and I'm in it still. Could go to break even or could wait for it to come down. But all 3 of these RSI extensions were correct. They have nothing to do with making money. They're just telling you the market is pushed up and they're telling you the market is pushed down. Whether you make money or not is where you press the close button. Has nothing to do with an indicator. Has nothing to do with banks and institutions, because they are moving this thing up and down based on the randomness of their orders long and short. And the balance of those orders long and short makes candles go up and down. That is something we have no control over. So we can look at the past and say usually when it gets up, it usually comes down a bit, but sometimes it doesn't come down far enough and you have to get in again. Yeah. How many people got into that and got out of it? Well done. I didn't. Does that make you better than me? Worse than me? Makes you different to me. Doesn't make any difference to anybody else. Like I said, my TP's here because I've got 3 positions on and that's my average price and this is where I see a target. If you've got 2 positions on, and your average price is here, you could get out now. You're not right. You're not wrong. You're just out with profit. I'm sitting waiting for profit. Just trading. Everybody has to have the perfect entry strategy system. There is no such thing. It's what it is. When you have a strategy that has 50% strike rate and you adjust it to make it 70, you've curve fit it. Yeah. That is exactly what you're doing, though. Look at this system parameter permutation test, right? There's 19,200 systems, right? This is a test using RSI2 on the daily time frame. I have created 19,200 systems trading the RSI2. One indicator, one setting on one indicator on one time frame. I've created 19,200 ways to trade it. Out of those 19,200, 17,686 of them are profitable over a period of 4 years in the past. Which one is the best one to use? I ain't got a clue. Yeah, all of them, any of them, one of them, none of them. I've no idea. But over the last 4 years, you can pick 17,600 of them and be right. However, 1,300 of them, if you'd have picked them, you'd be wrong. But none of these are right. Yeah. If you sort this column here by profit, that is the best one to pick. If you'd have got in with 2 trades and you'd used a moving average trailing stop on the 50 MA on the daily, and you'd have exited if the trade had got into profit at $400 and used a hard stop loss of half an ADR, you'd have made 7,900 profit and a drawdown of $1,300. However, if you'd have done this instead and only got into 9 trades instead of 2, using the same moving average, but instead of using half an ADR stop, you used a 3 ADR stop, you'd have made $7,800 instead of $7,900. And you'd have taken $2,000 a drawdown instead of $1,300 a drawdown. Which is the best one to use? I know. I've got 17,000 of those I can go through. Yeah, it doesn't matter. The thing got into the trade because RSI2 was extended on the daily time frame. It got out for 17,600 different reasons. It wasn't the RSI2 that made the money. It was the exit that made the money. The entry's got bugger all to do with it because that's in the past. As soon as you press that button, it's history. The RSI2 is gone. Moving average is gone. Stochastic's gone. MACD's gone. Moving average, anything's gone. It's gone. Doesn't matter. What happens in the next candlestick is either profit or loss. If it goes into profit, press the button, get out. However, if you'd have waited and done something else, you'd have made a different amount of money. This thing, if it gets to here, I could exit. I will make money. Should I or shouldn't I? I don't know. I'll tell you on Friday because I can't see Friday and I don't know if it's here or here on Friday, but I know if it's there, I can put it in the bank and spend it. It's got nothing to do with this indicator, nothing to do with a reversal alert, nothing to do with a propulsion target that may or may not get hit at some point this week. It's what all the gurus out there teaching you all these strategies and systems haven't got a bloody clue about where it's going in the future. Therefore, what the hell are they trying to teach you? Be into the future? They're selling you a time machine? No. Doesn't help at all. Something that happens regularly and there's 17,000 ways to get out in profit, use it. Same with the RSI 21 and the reversal alert. The combination of those two together over a period of multiple trades over time works. Can't tell you which one though, which setting is the right one to use because I can't see what's happening next week. What's the largest lot size you've gone to trying to recover a trade? I don't know. I've no idea. Over 10 lots. But it's what I go to again. It's irrelevant, Wayne, because my maximum lots that I get into is based on my entry lots, which is based on my account balance. So if you've got an account balance of 100K, your initial entry is going to be 10 times larger than if you had an account of 10K. So the maximum lots you get into is based on whatever your first entry was. If you're using a lot multiplier or not using a lot multiplier. If you've done drawdown control along the way, if you've not done drawdown control along the way, again, once you press that button, once you've got into 5 trades, there's a billion combinations of things that you can do after the trade's entered. None of them are right or wrong. They're just different. If you wait for something to get into 10 lots against you, it's going to hurt more than if you close out 5 of those lots halfway on the way to wherever it's going. Because you can't see where it's going, you don't know when to close things out. This US dollar CAD is either going to bounce off of this week's high because the banks are buying this level, or whoever has caused this sell today has got more money today than these guys. And if they have, it's coming down. If it's coming down, it's going to test this area here and hopefully come to the propulsion gap. But if it gets to that area there, I'm out. This is my ideal. This is where I will get out if I see any signs of bullish price action. If this thing comes down really hard today, it's going to have bullish price action. I can guarantee it, because nothing goes down in a straight line, does it? So I will be getting out when I'm scared. Is it the right thing to do? Again, 17,000 variations of that strategy say that you could get out there, there, or there. They all make money. Which one do you pick? That's the hardest bit about trading. This is why everybody struggles with holding trades. Yeah, it's really easy to get into this position. I took a short, I took a short, I took a short. Don't even have to think about it. The EA does it all for me. Yeah. When to get out is the only thing I have control over. This is why I only concentrate on exits, because I can't control where the market is going, but I can see where it might head, and I can see support and resistance. Yeah. So if it gets to this level, probably a good spot to get out. Yeah. But I've no idea if it's going to get to this level. It may hit this and bounce, in which case I can't get out. I'm short. People always say to me, when are you going to get out of the short? I don't know. Whenever it goes into profit. But what if it carries on going? Well, I'm still in short. I can't suddenly go, actually, I'll be long. I'm short on EuroCAD. I don't have a choice. If it continues to go up, I'm still short on it. The only way I can get out of it is to close it. But I don't want to close it because I'm short on it. And at some point, it will come down enough for me to get out of it. That's trading. Yeah. People focus on being right or wrong. They don't focus on making money. That's totally the wrong way to look at it. My focus is on making money. It's not focused on getting the entry correct, because I can't do that. No one can do that. Yeah. This guy on this financial juice feed that started doing all this stuff. Yeah. I watched this video this morning. I don't know which one it was. It was a video back here this morning, and I was curious as to what he was doing, so I wanted to watch it. It was this one. Yeah, open trade update. He starts off with this one didn't work, this one didn't work, and at some point in it, he says something along the lines of, hopefully tomorrow XYZ will happen. Yeah. He's using standard risk reward, and you know, that's hit stop, that's hit stop. There's no trades on these screens, you'll notice. It's all theoretical, but you know, he has no clue. He said, I think it was this one he was analyzing, or something else he was analyzing, saying, hopefully we will get the bounce here and go up. If not, we will go down. So he's got half a brain, because he's got 2 scenarios in mind. He's got a backup plan, except his backup plan involves taking a huge loss on his account before he's right. Best backup plan is to wait to be right, in my opinion. But, you know, so there's everything everybody does is always trying to get it right. That's not right. You don't try and get it right. You try and make money. Very, very, very big difference. Banks don't try and get it right. Banks scale into a direction and wait to get the money out of it. This is what we're doing. We're riding their waves. This is why all the indicators you see on my chart are telling me where the banks have pushed hard and where they've pushed from. and where they're likely to head to. Just about to break that low. We're having a knock on the door. Let's see if we get a pop down. So if this works, this sell, you should see a quick pop, which is basically all the longs flipping short and adding extra volume into the move. If it works. But you know, this is what makes the market move up and down and paint those candlesticks on the chart. It's the pure volume. It can only do that and that. And it's a simple maths equation. If there's 100 million going long and 200 million going short, the candlestick is going to be red. Because there's 200 million sellers and 100 million buyers. Therefore, price will move down. That's it. Unless you have a magic instrument that tells you what levels of money the banks have sitting there, nothing's going to help you. Haven't got through there yet. But watch this level. We'll either, you know, this is what M pattern and M and W pattern reversals are. This is what the market reversal alerts indicator is showing you. Yeah. The buyers have started to try and take control of the market. Sellers have pushed them back. If the buyers can push back and break the level they previously achieved, they have won control of the market. The sellers will realize they were wrong and flip in line with the buyers. M pattern reversals. Yeah, that's what that retest is. Sellers taking control of the market, buyers trying to regain control, sellers adding more positions, creating an M pattern. They come in double bottom format, they come in higher low format, they come in lower low format. But that's all it is. It's like hitting a level. Someone's got to lose. But the higher the time frame, the more reliable the signal, because the less of that crap, billions and billions and trillions in the Forex market of money that you're seeing happen on a 5-minute time frame, is all filtered out by higher time frames, which is why all the big institutions trade this. So what is this? A failed breakout. Why is that moved from that level? What did I say earlier? We're coming up to a double top monthly. They sold from that level. We tried again. They sold it again. We just hit that level. They just sold it again. Big, large institutional limit order triggered. Is it enough? We'll wait and see if there's more buyers now in the market than there was then. If there is, it will break it. If there isn't, we'll get a reverse alert, your M pattern, and it will come back down a proportion of that move, because the guys that went long realize they can't go any further. Therefore, they'll take profit, a portion of that position. That becomes a pullback, which is where Fibonacci comes from. Just bank movement. But you don't know what it is. I made 50% profit so far this year with a stop loss strategy that has a 50% win rate. With a 1.1, yeah. That's good. As long as it retains that 50% win rate, you're good, aren't you? It's flip a coin. It's exactly the same. As long as it can retain a 50% strike rate, if you can achieve the 1.1, you will make money. But that type of strategy, you have to have high risk. Because if you start risking 1% of your account on that type of strategy, you will be here until next decade trying to make enough money to live on. So you either need a big bank account with big risk, or you over leverage. But when either of those work, yeah, the people that double their accounts very quickly are using that type of strategy. There's a really good Bollinger Band mean reversion strategy that uses a 1.2R return with a very high strike rate. Yeah, I can't remember the name of it, the life of me. But it's got a 1.2R return, and the strike rate varies from 45 to 55%. But the 1.2R makes it long-term profitable. But you need a hell of a bank account to do it, to make anything decent. But you can double an account very, very quick. But a 50% strike rate does not happen. One win, one loss. One win, one loss. One win, one loss. It can happen loss, win, loss, 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 win, loss, 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 win, 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 loss, win, win, break even. 2 months. Did your bank account survive that? Depends on your risk. Yeah. 50% strike rate strategies fail all the time. Everybody that wants to trade prop, you're looking for a 50% strike rate strategy. That's an easy way to pass prop, isn't it? You have a 5% daily drawdown. Yeah. Risk 1% per trade. Take 5 trades a day. As long as 2 out of 3 are okay, you're probably going to break even. But that day you get 5 losers in a row, count blown. Or you don't quite take the 5% loss that day, but the next day kills you. This is why prop doesn't work, because prop know that 50% strike rates very easily will go in a 10R loss. No problem at all. 15R loss. Look at a back test. Look at something with a strike rate like this. Return on drawdown, 2.82. Yeah? Look at that. Look at the profit. Thank you very much. I'll take that. If you started your proper valuation there, tough. If you started your proper valuation there, tough. Started your proper valuation there, tough. Started your proper evaluation there, payday. Started your proper valuation there, tough. Yeah. This has got more than a 50% strike rate, this strategy. But it will lose all the time if the market conditions are wrong. And they will be wrong at some point. If it's a breakout strategy and it's doing that, you lose. If it's a breakout strategy and it's doing that, you lose. If it's a breakout strategy and it's doing that, you win. If it's a trend strategy and it's doing that, you lose. That is your stagnation because the market conditions are not suited to the strategy. Nothing wrong with the strategy. The strategy has a long-term edge. ORB, SIH, both have a long-term edge. At the moment, market volatility is down 30% and breakouts aren't happening. What's happening with the strategy? Stagnating. Nothing wrong with the strategy. It's just it hasn't got the strike rate at the moment because the market conditions are wrong. You can make money with stops. It's just incredibly frustrating because it's death by 1,000 cuts. This is the problem with it, isn't it? Yeah. And this is why everybody system hops. You get a strategy, you trade it. It makes a bit of money. Then it has a losing streak. That's no good. I'm going to go and find something else. You missed that. The next 2 weeks, it made 3 times more than you lost. But you couldn't handle that. That's why people fail. It's because you just can't handle the losing runs. It's not you, it's everybody. It's human beings. We're not geared up for this mentality. You can't beat the psychology. All the books about psychology are there to sell you books about psychology, teach you about psychology. I can teach you about candlesticks. I can teach you about markets. I can teach you about everything. Doing it is not learning it. Doing it is different. I can learn about psychology. I can read every book on psychology, be an expert in psychology, but someone comes in with a problem, I'm not sure I can fix them. I might know how to fix them, but doing it is a different thing, isn't it? Very different. Martingale as well is a good example, yeah? If you've got a strategy with a 50% strike rate using Martingale, you can crush it very, very quickly. At some point, you will blow your account. And this is why all the prop firms don't allow Martingale, because they know you can crush it. I can crush it for months if the market conditions are right. Find something in a range like this Euro CAD. 1, 2, 3, 4, 5, 6, 7, 8 weeks. Absolutely kill it. Martingale could double an account with that. But when this thing goes into a trend, that's why prop doesn't let you do it. Why the limitations are there. I've made 107% returns using mean reversion and small lot sizes in the last 12 months. That's pretty much what I've done, Wayne. Spot on. And that's, you should be able to double an account in a year. Yeah. But think about it, right? Why don't banks offer you savings accounts that double your money? Yeah. It's too high risk. Why are there no systems or strategies on Darwin IA that double your account? It's too high risk. What I do is high, very, very, very high risk. Very high. Yeah. To double an account in a year is incredibly tough. These people that have the Lamborghini courses that show you how to double an account in a month, absolutely impossible. Cannot be maintained. Lucky streaks. That's it. The guys that win the competitions, there's a couple of traders out there doing the circuits, right, who have been championship traders in the past. Yeah. I've also won on the horses. I've gone to a horse racing meet and got 7 in a row. Yeah. Am I the best horse racing pundit in the world? No. Once I did it. Now I can go and stand on stage and tell everybody how I did it. Yeah. Never be repeated again in the future, will it? Think carefully about what you listen to. Smoke and mirrors everywhere. Right, I'll leave it there. We are bouncing. They didn't get through. So we'll see how this holds up. It may well just pull back, but in the next 15 minutes, you've got a propulsion gap there. So that is your bearish move. This is, sorry, that's your bullish move, last bullish move. This is where the bear move is forming. So if this holds into Friday, we're waiting for that CAD news. We'll see what happens, but this still could go today. You know, they're bouncing. Doesn't mean they haven't got more ammunition. This is the first shot. We might get more. When you was a kid, 5% interest on savings, then free checking came. Yeah, but you know, the banks and institutions, you know, when they give you like 5% interest a year, it's like, what? This is why I trade. I can make more than putting money in a bank, because the banks are making 1 billion times more than they give you. You put 100,000 into a savings account and they go, here you go, it's high interest. We'll give you 3.5. Yeah, they're looking at that 100 grand going 60, 70 grand this year, because they will make a very high return on it, but they give you 3%. Yeah, this is why banks are paying out bonuses like they're paying out bonuses. Yeah, they have the ability to move the market and make a substantial amount of money in doing so by using your money. We don't have their money, do we? This is why everyone wants to get into prop, innit? Hang on, I haven't got 100 grand to make money. These guys will give me 100 grand. They give you a demo account. But we know that. Right, I'm going to leave it there. Dow's topping out at yesterday's high. So we've just hit yesterday's high on Dow. And we have bounced. So I'm going to close out the remainder of the Dow there. Take that. That'll do today on the Dow. Not sure we're going to get much more out of it. EuroCAD on a daily level looks good to go down. Yep. But then, you know, I'm looking at, that's exactly what I've just said, isn't it, Wayne? Yeah. You're just looking at it on a daily chart. I'm looking at it on an hourly chart. This is a rejection of the monthly double top. So you look at it on a daily chart, it's going to turn into a shooting star. Yeah. What's my favorite chart pattern? 3-bar reversal. Push, pause, pull. Push, pause. What's next? Push, pause. It's coming. Well, might come, might not. It's got a 50-50 shot in it. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram, Discord. Tomorrow is pound. So I'll be on at 11:45 tomorrow morning, UK time, for the pound interest rate decision. So that is at 12 o'clock our time. We're going to get the 5.25. It's the votes, which I can't draw. It's the votes which are important. They will give you the initial shock value. And then basically it's the press conference at 12:30. So Bailey will be the pushing or pulling the market based on obviously what he thinks and what the press conference asks him as questions. Then later on, we've got the unemployment claims for the US, and then we've got Macklem later on. 30-year bond auctions do move the market as well. The 30 years tend to be much bigger from a dragging money into the US dollar respect. So that is why that is red and the 10s are usually orange. We do get movement off the 10 as well, but that's coming out tomorrow evening as well. So we might get a bit of movement off the back of that, but it's all about the pound tomorrow. So the market, as we know, has been sitting around today waiting for something, probably that. So hopefully we'll get some decent movement tomorrow off the back of that. But anything that's stagnating that you can take at the moment, just take it. That's what I'm doing. I'm just banking as we go, as much as possible, really, just to get something in the bank, really, because it's tough. But yeah, we'll see how we go tomorrow. All right, so have a good day. I'll be back tomorrow morning. Telegram, Discord, if you need anything else. Have a good one.